Today, we're going to talk about LLCs and S Corp. Several of you have asked me about them, so let's go ahead and explain and walk you through the process. So, an LLC is not a corporation. It is a limited liability company. What it does, it protects assets or streams of income. So for instance, some of you that are doing ACA and Medicare, you receive a stream of income from United or Humana, and that comes in every single month. If you get sued, let's say you have a car accident and you get sued, they can attach that stream of income because it is your stream of income. So they can attach that, and if you lose that lawsuit, they're going to take that money from you. If it's part of an agency and you have an LLC, a limited liability corporation, the agency gets paid. You get paid from the agency, but the agency gets paid first. And that stream of income is not considered an asset on your part. It's considered a separate, total different entity. So that's one thing about an LLC. It protects your assets and your streams of income. The other thing though, since you are self-employed, and we're just gonna go with round numbers. Let's say you make $100,000 in taxable 1099 income. If you're a W-2 employee making $100,000, you have to pay 7.65% in FICA, which is about $7,650 in FICA taxes. If you are self-employed, you have to pay double. So you have to pay your 7.65 and then the company's 7.65, which is 15.3%. The same $100,000 is now you have to pay tax on $15,300 just on the FICA, not the federal tax. The federal tax is going to be added on top of that. So those are things you want to consider whenever you get to that point where you're getting near $100,000. You want to be able to convert from an LLC to an LLC with an S election, which is an S Corp. And that S Corp now, you can pay yourself a salary. And you can pay yourself a salary of about $30,000. That's a safe number. And you would pay FICA on that $30,000, but the other $70,000, no FICA. You still get taxed on it, but federal tax, but no FICA. So that's a savings of about $10,000 a year when you convert to S Corp. Now, some people have asked me about doing S Corp at $30,000 or $50,000. I don't recommend it at that time because the cost to file an S Corp and that extra paperwork involved every year, and if you're not timely or if you're late, you're going to pay a lot of fees and penalties because now you're going to get penalized. And the S Corporation deadline is March 15th instead of April 15th. So that's something to consider. So normally it's when you're getting about $100,000 in 1099 income. That's the sweet spot to convert to an S corporation. And if you need any help with any of that, let us know. There's other ways you can reduce your income, setting up a solo 401k or even a self-directed solo 401k, because those are awesome. You can put in potentially up to $56,000 a year into that. And that'll all be tax deferred. You pay no tax on that. So those are a lot of different things you can do, especially when you're self-employed. Get a lot of write-offs. Tax season's already over, which is thankful. Laura was busting her ass up trying to get all these tax returns out. But for all of you, start preparing this year for next year. You need to start doing that now. So any questions, give us a call. Thank you.